Welcome to the new episode of the Learn and Trade with Popeye. Today I want to see with you how you can optimize your trading routine, both to improve your trading performance and also to have, let's say, a better lifestyle. We see the monthly, the weekly, the daily, and each trade routine that I'm following, so it can also help you to be more disciplined on the market. Before starting the video, big thanks to ZoomeX that is sponsoring. You will find a referral link on the description below, so you can trade with me on ZoomeX. It's a super cool exchange, no KYC, and we also run regularly a super cool campaign to boost your trading experience. Also make sure to subscribe to the channel, leave a comment and a like, so I will know that you like this content and I will create always more. But without further ado, let's see the chart that I've prepared for you to improve and to have a track on what you should do on the several phase of the trading journey. So I divided, let's say, the routine on these 5 categories. That is the monthly, the weekly, the daily, each single trade, and deposits that are also a very important part of trading. So let's start from the monthly. So on monthly basis, you have to set first of all your goals. So at the beginning of the month or at the end of the month, you have to set the goal for the coming month. This goal vary according to your stage, let's say on your stage on your trading journey, and you will need to define some clear goal for the month to come. It can be a percentage of rewards you want to have in the next month. It can be, let's say, a win rate on your trading, or simply, if you want to improve more your discipline, your approach, can be emotional control or avoid over trading. I mean, you have to understand from the previous months what was your biggest weakness and try to focus on the coming month on improving each month some specific object. Money is always secondary, so remember that you have to first focus on the weakness that make you lose money, and after you address this weakness, then you can focus more on P&L and returns. So do not start immediately with I want to make $1 million next month, but try to understand what is endangering your trading journey and try to assess this specific problem. Then you have to define your strategy. You can have even more than one. There are many different strategies, but here I noted that you want to trade on high time frame, you want to trade in low time frame, you want to follow the trend, and you want only to take take trades following the main trend or the low time frame trend. You want to play a reversal. Let's say you believe that some specific pairs or Bitcoin is reaching a key support or a key resistance level. So for the next month, you want to focus on a potential trend reversal trading strategy. Or simply your strategy is to trade sideways price action and you want only to trade ranges. But it's important that you define what is your strategy, where you are excelling, what are your talents, and try to focus to trade only those specific strategy. Once again, you can have more than one, but you cannot have, in my opinion, 20 different strategy. Then you have to make sure that you complete all your journaling, so you documented all the trades you took in the previous months. This is better to be done weekly, we will see later, but at least monthly you have to make sure that all the trades you took are documented, so you are aware of what happened on the previous month. Once you have completed your journaling, you have to make sure to review it properly. So you have to understand, thanks to your journaling, what went well, what went wrong, and specifically why. So you have to define what are your strengths and your weakness. Once you define your strength, you will try to do more of what you are doing best, and once you define your weakness, you will try especially with the goal that you set for the coming month, to address those weaknesses and try to improve at least on some of them. Try to be realistic. So if you have 20 weaknesses, you cannot address 20 of them all at once in 1 month. So try to be realistic and to address few weakness or one weakness at a time, so at least you do small steps but you proceed because these goals that you are putting yourself are more realistic. So once you finalize all of these, you propose adjustment. So the adjustments should be concrete. So what went wrong last month? I overtraded. So the adjustment should be I want to trade less, I want to be more patient, and try to select how you can improve. So using alerts, using limit orders, should be something very concrete, not vague that is not clear what you want really to do. So once you make a plan for the adjustment and for the improvement, this plan should be very concrete. So I want just to follow the trend, so I have to make sure that I will not take counter trend trades. And always make sure that you underline what is going well, so you make sure you continue to do what is going well or what you have improved. It can be a strategy, it can be an emotional control, it can be many different things, but should be again very concrete. And you also have to make sure that you deeply understand what is not going well, so you will avoid to continue to do the same mistake over and over. To give you, let's say, a parameter, the monthly phase that I told you here is a bit long. So if done properly, it should take you at least, let's say, a few hours or a half day to make a proper assessment. But it's done once a month, and you will see that if you do the weekly and the daily properly, the monthly one will be less stressful. If you don't do anything of those steps on the weekly and the daily, then on the monthly you will have a huge workload to fulfill, and probably you will never do it because it will seems too much to do it. So this is what set you, let's say, for the month to come, and then we go to the weekly. During the week, especially if you are high time frame or swing trader, but let's say also if you are scalp trader, but the weekly part for me is probably the most important because it's easier to monitor, easier to follow. Because the monthly 30 days is a very long time, so it's very easy to forget. It's very easy to lose consciousness and awareness of what were your goals, what your step, and what you are working on that specific month. But in the weekly is more easy because again 7 days probably human mind is easier to track what is happening on the week. So on weekly basis, first of all, let's say on Sunday, or if you want maximum on Monday, you have to create a bias. So the bias is what set more or less your approach to the market. And basically you can have 3 bias: uptrend, downtrend, or range, choppy price action. So you have to try to set your bias. The bias for the weekly should be done on high time frame. So I don't know if you want to look at Bitcoin chart here. We can say that clearly here the bias was bullish on high time frame. Then we can say probably here there is a range deviation or whatever, you can adapt your bias, but the bias should be again done on daily or weekly time frame. And you say, okay, next week I see that we are still in a bullish bias, then we are getting a dip, but this dip is still on a bullish market structure that is something like this potentially. So my bias here is to buy the dip around here, just to make it super simple. Or once the price arrived this level here last week, probably you would say, okay, we are approaching resistance, my bias is to be cautious or to take profit on long position. And once you select your bias, also make sure to set or define some criteria that will allow you to change this bias. So you will not be emotion driven once something happens on the market. So once again, to speak about Bitcoin, you could say, okay, for me the structure of Bitcoin is here. The structure of Bitcoin is somewhere here, so my bias remain bullish as long as we hold here and we go above, or as long as we sweep and we go above fast, but my bias will change if we lose this level and start to find acceptance below. Just again, to give a very simple and stupid example. So you should have a bias that again here is bullish structure on high time frame, but you should also be ready to adapt your bias, not stick to your conviction if the market change something important, and you have to say, okay, if this is invalidated, my bias will change, or if I see a strong move above, my bias will change as well. Then what is very important during the week, during the weekly preparation, is to map key event, especially economic event, holiday, and whatever can happen in the market. So if there are mainly for the US economy, macro event that can have an impact on your trading. So you are aware that Wednesday there might be some important meeting or data released, and you have to be aware of this data release, so you are not unprepared if there is a lot of volatility on Wednesday. Then you have to start to make a deep review of the past week performance, and set clear, as we say in the monthly, but I think for me in the weekly is even more important, set clear areas you want to improve. So let's say that you will realize from your past week performance review that you have been impatient, so you will clearly make in your weekly plan a commitment to be more patient and to be less emotional. Or you took too many market orders, so you will try to force yourself to trade more with limit orders. Or if you have traded too much on low time frame, and in low time frame there is more noise, or if you have overtraded, you will set clear goals to avoid overtrading or take too many market orders. Once you set your goals and everything is clear and you have a bias, then another important step is to create a watch list. So you will scan the market. Up to you if you want to scan the first 100 coin, that is what usually I do, or if you want to check all the entire market. But the important part of this is that it's too complicated and too noisy to follow too many coins, especially you are distracted because on X or on the other social you are bombed with information about many chart and many coin, but it's important you have your own watch list. So you will check your total watch list, again up to you if you want to have 100 or 1000 coin, but what is important that at the end of your weekly check of the market, you get out with 10 or maximum 20 pairs that you want to monitor closely during the coming week. That doesn't mean that you will not be able to trade anything else, but you know, and this will help you to save time during the day of the week, because you know that if you don't have too much time or you don't want to be distracted too much, you will just focus on those specific coins. So once you open your watch list, okay, this is not my main watch list, but you will flag those coins with color. What I usually do is that I flag on green coin that I'm more looking for long position. I flag on red coin that I'm looking for short position. I usually flag on blue current open position that I have, and then you can flag other colors as you want. I don't know, you can make in yellow interesting coin where you don't have yet a bias or where you think that is worth to monitor. Lastly, I also put in violet coin that I have set bids on the order book. So I'll give an example. So I know that if there is a dump, I will open Tau chart to see if Tau chart is getting closer to my entry level. If there is a pump, I will open hype chart that is in my short watch list to see if I reach a level where I want to open a short. I know that I have an open position on BNB, so I know that I will open there to check how it's going the position. I know that virtual is an interesting chart, so I open to monitor. I open AVAX because I know that I set some orders, some bids for AVAX, so I can follow them. So I think the color flagging system for the watch list is very important. So on weekly basis, according to your evaluation, this is something that will help you Monday, Tuesday, Wednesday to go fast. Then of course during the week you will change the color if new coin come to your attention, if something changes, if an order is filled for a long from green, you move to the other color of the order field. But this I think is very important to first to reduce time and to cut the noise of following 100 coins, but secondly also to be more organized and more disciplined. Once you have set map all the levels and created the watch list, it's important you start to set alerts. So you set alerts close to the level you determine as important, and this also will help you. So the alerts will ring. So very simply, if you do like this on Bitcoin, you add alert. So you know that if Bitcoin cross 100k level, you will have the alert. You can specify what the message should come out on the alert, and is crossing this level, for example. What is also important that you can write here Bitcoin crossing 100k, potential long entry, check, for example, RSI divergence, wait for an swing failure pattern. I make an example. So whenever this alert is triggered, you can also be more objective to see if once that level is visited, what you had in mind that should happen to trigger a trade or not to trigger a trade is actually happening. So if you use this system, once the alert is activated, you will be also less emotional, and you will be less stressed to understand what you have to do and to remember everything you selected on that moment. These are examples I'm writing, but you can write as much as you want. But make sure that you don't simply set alert, but you set alert smartly, saying what you want to do if this level is visited. Once again, as we were saying here, this is a key level structure-wise for Bitcoin. So perhaps we want to set an alert here, but we want to say, okay, potential market structure break, potential sweep of the low and moving higher. We want to check, for example, momentum on RSI to understand what this move is doing, or whatever else you want to check, funding rate or CVD or whatever. Second part, let's say, is the one a bit more aggressive. You can start to place order. So once you selected your level and you want to long Tau or short hype, so you want to put some orders, bids or asks on the book on a specific level. For limit orders, my suggestion and my personal rules, I put them always with a hard stop loss, because you never know if these levels are visited when you are sleeping. Maybe there is a huge liquidation cascade and the price can go much lower. So it's always better to have a stop loss. And always, whenever you place this order, make sure that you monitor very, very closely your maximum risk tolerance. You will find here in the playlist of the Learn and Trade with Popeye a full video on risk management, but make sure that you don't end up putting 20 order on the book with similar style, especially risking 2% for each trade, because if there is a huge event, you will lose 20 times 2, 40% of your portfolio in one single shot. Finally, during the week, then when the week finish, you make sure that you finish your journaling, document all your trade, you review all your trade, what went wrong, what are the strengths, what are the weakness, and you start again with the cycle of reviewing past week and moving to the new week. Again, for me, the weekly part is super important. I would say is one of the important part of all my routine, even more important of the monthly and the daily. Personally, I see the weekly, let's say, step or the weekly progression to be much easier. Also, it's much easier week by week to set very clear goal and to monitor this goal pretty immediately. While if you wait 1 month, maybe you lose the momentum of what you're trying to do. While in the weekly, doing it weekly is very easy to keep the momentum going and pressure on this weak or strong spot. Then we go on the daily. So daily, let's say in the morning, what is important that you try to do, let's say the daily routine in a as much as possible in a good mental state, because this is what really implies with your execution a lot. So my suggestion is to avoid to check social media before, or to do it if you're stressed. Maybe you can do some workout before to clear your mind, or whatever is your routine to do it more focused as possible. Avoid to do it, let's say, as soon as you wake up or from the bed or whatever can be your, let's say, degenerate mistake on this. But once you open, let's say, your routine, you set in your desk again, focus as much as possible. First things to do is to update your bias always. First is always the bias before doing anything, and can be on many reasons. The previous daily closure, divergence in a time frame, if there was a trend break or whatever, it can help you to update your bias. Let's say on the weekly, our bias was bullish, and then we started to have all these red candles. So your bias here, because we had 4 or 5 red candles, can be updated and can say, okay, here there is clear weakness, so we are close to the weekly closure is Friday or whatever. Is difficult, there is a reversal, so I am updating my bullish bias to a bearish bias. Or if on Tuesday something happen here that you get this break, then you will update your bias because the bullish structure is broken. These are very let's say simple and straightforward example. Then before starting to trade anything else in the crypto sector, make sure you do an in-depth update on Bitcoin, because all the cryptos are strongly correlated to the alpha assets. So first of all, always have a very deep understanding of what's happening in Bitcoin. So if Bitcoin is at support, Bitcoin is at resistance, Bitcoin have strong divergence, losing momentum or whatever, first make a bias on Bitcoin, because if Bitcoin drops 5, you know that altcoin can drop 20%. Once you updated your bias and you have a deep understanding of what's going on Bitcoin daily, for our chart for example, you go again to your checklist and you quickly see what is happening on your watch list, what you had in mind for longs, for short, the open position, if the order were filled and whatever. So you can have a quick look of these 10 and 20 pairs you have selected once you were making the watch list, and in this way you quickly can have an update of what you had in mind or plan for the week. Once you check all of these, that you are aware maybe orders will be filled because you are very close to new order to be filled, or alerts will be filled, will be activated, make sure you manage your current position. So you can adjust your risk on the market, you can de-risk some of the position, you can move stop loss at break-even on other position because perhaps other position will be filled, so you want to reduce the risk on the market. Or if the market has moved on your direction, you can start to take profit, partial profit. So again, you reduce in that way risk on the market, and you can fill other orders. You can also update all your alerts in case it's needed. This, let's say, is facultative. You will see what is happening, and especially make sure you update orders. Again, considering your total risk tolerance, what is happening, perhaps you took profit in many positions, you have more risk to allocate on the market, you can transform some alerts on orders. Or if you are risking too much in the market, you will cancel some open orders because you will not endanger your maximum risk tolerance. So this is something that you simply update. This is why the weekly part was important, because you did, let's say, an important job for the weekly planning, Sunday or Monday, and on the daily basis it will be quite fast and automatic, because already there is a plan, already there is a watch list, already there is orders and alerts, everything is flagged. So on daily basis is pretty fast to do all this stuff. Before closing the day, let's say before you close your laptop or your computer, but it's important, there is a moment where you, let's say, decide to close and switch off at least officially. Then maybe you will monitor something from the phone, but should be more relaxed. You have to review before closing all the risk you have in the market, because you have to make sure when you go to bed that you are aware of what you are risking, what you have orders, the position you have open on the market. You have to set taking profit level, stop loss level, whatever. You cannot leave position unmanaged during the night or when you are away. First, because it will create a lot of stress for you, and second, because it's very dangerous, because if you don't leave a stop loss for position unattended, it can be very dangerous in terms of risk management. You can leave a small note on how the day went, psychologically, market-wise, what happened, if there was some very big catalyst happening, and this will be the note you have for the coming day. Then it's very important that you monitor, let's say, how your sleeping is going, because you will understand if all the above is done correctly. So if you sleep very stressed and you are always thinking about position, you are constantly watching your phone during the night, all this kind of stuff, it means that you are doing something wrong. First, because if you sleep stressed, the day after, again, you will wake up tired, stressed, and not focused, and you will continue to make mistake. And if you sleep stressed, means that you are doing, again, something wrong. Your position size is too big, you are too uncertain about the market, you are doing something against your rules, and something is not clear in your strategy, and this is burdening you. So monitor also how you are sleeping. So once all this is done, you are ready, let's say, to move to each single trade. Just make sure that if you want to take any trade, you do with me on ZoomeX. This is the portal of ZoomeX. You will find the referral link down in the description below, so you can enjoy a 20% discount on trading fees and the very frequent campaign we do with the ZoomeX team. ZoomeX is non-KYC, so it's very simple to register. You just need an email address. You don't need to provide any personal information. It has, let's say, all the function of Bybit, all the liquidity of Bybit, but again, it's in non-KYC, so it's super simple and respecting your privacy while using it. As you can see, you have all the normal function of every exchange, helping you to see what are you risking, how much you are allocating, and so on. So it makes the trading experience super smooth. So once again, check in the description of the video to join ZoomeX using my referral link. So now that you have followed your monthly, your weekly, and your daily routine, you are ready to open some specific trade. So first thing before always opening trade is to have a bias. So you have to understand if you are trend trading, if you are range trading, if you are following the trend, or if you are going against the trend, or if you are simply trading support and resistance. So you have to make sure to be aware what are you doing according to a specific bias you have on the market. Then you have to understand what strategy you are using and why you are using. You want to trade a range deviation, you want to trade a trend continuation, moving average entries, or whatever. Make sure that once you have a bias, you use a strategy that is compliant with that specific bias, and potentially to be a bias that is compliant with the strategy you set yourself on the monthly planning. Once you have decided that the bias is the strategy is compliant with the strategy, the level is respected, and whatever you wanted to see in the market is actually happening, you have to define the risk you want to allocate to that specific trade. So as you will see in the video I posted about risk management, leverage and whatever is irrelevant. What is important is position size comparing to the stop loss placement. So you will define the risk for that specific trade considering two things. First, your total risk tolerance. So if you have already other trade open, you will avoid exceeding your total risk tolerance, let's say 5% total risk on the market. If you already have 4% risk on other trade, you know that this trade maximum you can risk 1%. And also you will define the risk specifically on this trade. For example, if I'm doing a counter trend trading, so if in an uptrend I try a short, I know I will risk less than if I do a following trend trading. This is an example, up to you. But if you know perhaps that a strategy for you is not a very reliable strategy, you will risk less. While if you are using a strategy that you are more comfortable and you have a higher win rate, you will risk more on that specific trade. So the risk should be something dynamic, not, to my point of view, not something always the same. You have to make sure that your entry has a reasoning, a timing, and an execution. So what is the reasoning? That level is visited. For me, there is a moving average, there is a order block, there is a market structure, or there is a divergency, there is support and resistance. So the reasoning for my entering is very clear why I am entering exactly in that level. Not because I have FOMO or anything else. The timing of the entry, so perhaps you don't enter a position few minutes before New York Open, you don't enter a position few minutes before, I don't know, weekly closure or whatever. You can have a reasoning for entering or not entering position in a specific timing. And finally, the executing, so why you are exactly executing that trade with that reasoning at the time and in that moment. And always make sure to know if you are better or if it's different, if you are making a market order or a limit order. Remember that market order are potentially more inclined to your emotion, because you are clicking at that moment and you are market buying something because you see something happening, and it's not something probably that you have properly planned before. So I'm doing a lot of market ordering. That is not a dogma not to do it, but be aware that usually limit orders are less emotional comparing to market orders. So just be aware of this when you do one or the other. Immediately set an invalidation level, so where your thesis for taking that trade will be invalidated. If you are not in front of the computer, make sure you also set a stop loss and give one or more reason for the invalidation. Why this is important? Because perhaps if you have 2 or 3 reasons behind your thesis, and these 2 or 3 reasons need to be invalidated to close your trade, you will also be able to close the trade earlier if few of these reasoning are invalidated before the full stop loss. So if there was a market structure, an order block, and a moving average, perhaps if the order block and the moving average are lost, but the market structure is still not broken, but the price keeps dropping, then perhaps 2 of the reason out of 3 were already invalidated. Perhaps you can cut your loss earlier because already, let's say, 75% of the thesis has been invalidated. So try to have more reasoning behind your invalidation and your stop loss level. Set immediately a level for your final take profit, partial take profit, or whatever you want to do, and also explain why you want to take profit at that level, because there is a high, because there is liquidity, because there is supply, because there is resistance, and also make some rules why you might close the trade earlier. So let's say you take a trade on the daily and there is a bullish 4-hour market structure, so you want to aiming to a fresh higher high on the daily, but you can say if there is a 4-hour bearish market structure break, I will close the trade before because I see on a lower time frame a trend shift, a trend structure break, so I will exit this trade immediately to at least realize some profit. Also make some rules for a possible evaluation criteria of the trade. Again, if you write them or remember them in advance, you will be less emotional once this is happening, and you will avoid micromanaging the trade. So you want to reevaluate the trade once a level is visited. I don't know, there is a resistance or there is an high and you see a sweep, a weak swing failure pattern, and at that level, so you say, okay, I want to reevaluate this trade. This happen, and for me this trade is better to be closed here, both for a small loss or both for a small win. But make sure you have some, or if Bitcoin does something, perhaps your HYPE or Tau position need to be reevaluated because something happened on the alpha asset. But have some criteria why you will manage or update that position while is open. It's always better to set criteria before you open a trade, because if you do it once you have money on the table and the risk allocated, your judgment is endangered by your emotional connection to the money you have already invested. While if you set criteria before putting money on the table, you are more objective. Finally, to conclude the video, also set rules on your routine for deposits. So remember that trading is also a lot of waiting, a lot of inaction, a lot of preparation. So you have to have rules and routine for not trading. So this is something many times overlooked, but is also very important. And I selected 4 categories of reason for pausing, let's say, or not avoiding you to trade. One is an external factor. So there are holidays, there is weekends, there is main economic events, to give some example, where you decide not to trade because these periods are more choppy, more dangerous, too much volatile, unpredictable, or whatever. So you say that, okay, on your weekly mapping of key event, you know that there is a FOMC meeting on Wednesday, so you decide that Wednesday you will not trade. You can do many other things, mapping level, journaling, preparing, studying, but you know that Wednesday you don't want to trade. You don't want to trade in weekends because weekends are choppy, price action is more unreliable, or you don't want to trade during the summer holidays or during the winter holidays because, again, market is more unpredictable on those periods. So you set rules not to trade on these external factor events or criteria. Internal factor is because you are too stressed, because you had too many consecutively wins or losses, so you decide to take a few days of break to avoid trading when you don't have the right attitude and the right focus on the market. Market factors also can be something that determine if you trade or you don't trade. You don't want to trade ranges. There are traders that trade only strong uptrend or downtrend, so you know that when the price is undecided and is going sideways, you simply don't trade. Don't trade at mid-range. You are a range trader and you know that the most choppy area in a range is mid-range, so as long as the price do not reach range high or range low, you avoid the trading. Or don't trade again, if you are a purely a range trader, you don't trade up or down trend, but any of the market factor that create a weakness for you should be identified, and you should be avoid to trade as less as possible when these market factors are occurring. There is no need to trade any single day or any single market condition. Also, finally, bias, we say, is very important. You can also say that you are unable to form a bias because there is a conflicting trend, because trend is conflicting with the range, because the trend is reaching resistance or whatever. So you are unable, or you are confused to form your bias. You don't have a clear bias, you simply wait until your bias is more clarified. I think was a very in-depth and intense topic, a lot to digest. So just to summarize very clearly, trading routine is a super important part of your trading. First, to trade better and to trade more, to maximize, let's say, the moment you allocate to your trading journey, especially if you have a job or if you have other commitment, a family. This will help you to maximize the moment you trade, and you just don't bullshit around chart all day, confused without knowing what to do it. The routine is also helping you to divide the moment during the day, during the week, during the month of what you should do, what you should focus. And also, what is very important to have a routine is to avoid emotional trading. So the stronger your routine is, the more you will be forced to apply discipline, risk management, patient, waiting, avoiding to trade in all that situation, moment, market condition where you are more exposed to losing and you are less exposed to winning. So following a proper routine will help you to maximize internal and external factor to allow you to click button when you have the higher chance on success. So divide your routine on 5 specific sectors. That is the monthly, the macro level. You do 12 months a month to give you a general direction, a general goal, general strategy that you want to follow. Then the weekly, as I said, is for me the more important because it's very tangible, it's very easy to monitor, it's very easy to keep a momentum. Then the daily is what is very related to execution, so it's very important to be aware of what you are doing every day specifically, because then day by day, then you take decision and you make mistake or you make good decision. Then for each single trade there should be a routine that you follow, because that is where you physically put money on the table. And also you should be aware of the moment where you simply don't have to trade. So the pauses are as much as important as the other. Remember that trading is 90%, is 80% planning, and then waiting, and then executing. So all these will fall on this division. So I really hope you enjoy the video. Make sure that you want to take any trade you do with me with ZoomeX. You will find the referral link in the description below. Make sure to leave a comment on the like if you enjoyed this video, and subscribe to the channel if you haven't already. We'll see in the next video. Stay safe out there and enjoy. Bye.